Hi, this is Todd Baker, and this is another version of Tuesday Tips. And in this week's episode, I want to give you some great information to help your buyers and sellers also achieve independence through home ownership, financial independence through home ownership. We know that right now we have an inventory problem. There's not enough houses on the ground for people. We have 30,000 people a day moving into Texas, and there's no way to keep up with demand for probably close to a decade. We also know, based on two studies, I've mentioned this in prior videos, but if you haven't seen that before, there's been two major studies showing that buyer demand is going to increase significantly once rates hit 4.99%, which is expected in the next 12 to 24 months. People are waiting for lower rates. Now, actually, a quick tip, rates are at historic lows. The historic average is 7.73. Keep that in your back pocket, because even rates in the sixes right now, sometimes you can get as low as fives with a buy down, are still really good. But most people are waiting. And what they don't realize is by waiting, we all know what's going to happen. There's going to be a bidding war when rates hit that 4% range, and they're probably going to pay $25,000 over list and have to guarantee it. But you have to show people. So check this out. I put together a total cost analysis for John and Mary Homebuyer. And what I did, and you can, if you need me to do one for one of your clients, let me know. I can do a custom one based on their situation. So if they buy a $400,000 house now with an interest rate of 6.875, and if today's video, the average rate according to Mortgage News Daily was 7.05. So say 6.875, payments like $34.99, total out of pocket. I just did like a 5% down. Is with closing costs, buyer paying all closing, $32,824. So it's like sort of a worst case scenario. Now, let's say they wait, and let's assume that houses don't even go up in value at all, which is not true. They'll go up about 4% per year. But let's assume they didn't, okay? And they get a 5% rate. Rates are back down to 4.99. It drops to 5%, so 2% is off the rate. They do get a nice $456 a month savings, okay? But let's scroll down. They have to, in this case, put an extra $25,000 down. Why? Because they have to guarantee an appraisal. So if they pay an extra $25,000 and they're paying that out of pocket, that's part of the cost factor that they're paying into the mortgage. And so now their cash to close jumps from 32 to 57, and the savings over 24 months is you actually are winning by buying now. And check this out. Once rates drop, they refinance into the mid-fours, the payment drops even lower than if they had waited, and they even save more money. And look at the net worth analysis. Over 5 years, it's almost, break even. You get a little better net worth with option 2, theoretically, because you put way more out of pocket, down into the note. But right here, and you get a little bit lower rate, but it's basically almost a break even. But look at the 5-year analysis. It's $166,000. That's the key. This is the one where they're going to look at. So what you have to do is explain to people on a cost basis over the next few years, you want to marry the house, but we're going to date the interest rate, and it's going to cost more for you to wait, and here's why. And then boom, nailed with that. GDP was just out in Texas this last week. We're 3% growth. That's full 1% over the national average. There's not a recession in Texas, and it's number one in the United States of America. They just announced a chip factory up in Sherman, Texas. That's going to be massive growth up there. And you can pick almost any town within 50 miles or less, probably 20 miles. There is huge success stories and business going on all over the state. You are on the golden age of Texas. This is the renaissance of Texas. This is when to buy right now, because prices are going to continue to rise. So use this to your advantage. Like I said, I can customize this for your client. And you know what? If you and I haven't worked together and you watch this video, you think, well, I've had a lender for the last 4 years. I have 2 I really like or 1 I really like. That's fine. But if they're not giving you this kind of information, how are they really helping you grow your business? I'm assuming you're in business to grow for you. So reach out, add me as another lender. I can do custom analysis for your client, get them off the fence, in most cases, get them moving, and you will see an increase in your pipeline, an increase in client experience, an increase in retention, and an increase in referrals just by working with the right lender and working with this type of approach. So happy Independence Day, and hope you have a great day.